Joining our closing bell exchange today, Cassandra Toroian from Bell Rock Capital. Jim Cahn is here from Wealth Enhancement Group. Rick Santelli joining us, as always, from the CME in Chicago. Jim, record highs for the Dow and the S&P, despite the biggest retailer in the country, Walmart, giving a clear indication that this is going to mean higher prices for the consumer and warning on the U.S. economy.
So as people talk about these new highs, people might get excited, and then they go look at their accounts, and their accounts aren't up as much as they would have expected given all the headlines. And what's really happening is there's a big divergence that's going on between U.S. companies and what's going on in really a small segment, actually, of the U.S. market that's really leading us higher, and what's going on in the rest of the world. So if you look at the Chinese market, it's in a bear market territory. If you look at India, it's in bear market territory if you take the currency into account. If you look at Europe, you basically have no gains out of Europe. And so while the U.S. market, and in particular a very small group of companies in the United States, has led us to these new highs, that's leading a lot of people to think that things are in better shape than they actually are. When you look more globally, things aren't quite as good as they would seem in the U.S.
Cassandra, I guess September has played out a lot better than some people had feared after a decent summer, kind of the back-to-school type month, and whether it could see pullbacks. Do you think that can continue into October?
I actually think that October is going to be more volatile than we've seen in September. I think once we get past the end of the quarter, we've got a couple things going on in October. Obviously, we're getting closer proximity to the midterm elections, which I think is going to have some mudslinging and create some more ugliness. And we've got earnings season. And I think between those two things, we're going to see an increase in volatility. But I think if we get past those two items, on the other side could be a very strong market, depending on what happens in the outcome of the election. And I would actually say that I disagree with the other guest in the sense that this is a very broad-based market expansion, because those smaller companies that he's referring to aren't in aren't in the Dow Jones. And so, you are seeing across a spectrum of different size companies doing very well. And it's, I think, the fact that even though we have the NASDAQ down and you have these other two indices doing very well speaks to that.
So, Rick, actually, this was a much better week around the world. Shanghai closed up 4.3%, best week since back in 2016. The dollar fell 0.75%. What's the narrative there? Did things get better on the global economic front?
Well, I think the narrative is that our markets are doing well despite all these companies and Walmart complaining they're going to have to pass on higher prices. I really think that is the story. And it's not that these issues aren't going to affect the economy. And the economy isn't always synonymous with the markets. But I do think that the dollar index is going to have a bumpy time. I think it's going to be much more in a consolidation mode than it is going to be in an extreme direction mode. I do think we have to pay a close eye on the pound and the influences of how the issues with Brexit, as complicated as they've gotten, can affect the first quarter of 2019. But at the end of the day, we all proceed as though investors are thinking, well, this whole thing on trade's going to work out in a fashion that's not too dissimilar with history. Maybe it's going to be completely different. Maybe there's going to be a faction of the globe that centers around China trade and a faction of the globe that centers around U.S. trade. We're tearing apart a lot of the things that have become normal operating procedure, whether it's on trade or foreign policy. Now, that might not be something comfortable to go through, but it doesn't mean we're not going to go through it. And maybe the markets will experience it in a little different way than we imagine at this point, considering what we do and don't know.